All right, good afternoon, folks. Welcome to today's 4:15 webinar. It's Elliot on the mic, and today is Wednesday, the 17th of December. Hope everyone's had a good day today. We've been just continuing with the volume profiles for today, taking a closer look at the value areas and points of control. So a few small self-contained setups that you can be looking for with those. Today we're going to look at market profiles. I'm not sure we've done a full recap on that yet, but we'll do market profiles now, and then we'll pick up the rest of the volume profile stuff a bit later on in the week. Just for the calendar quickly, we'll have a look at what is coming up for tomorrow. It's been a relatively quiet day otherwise. We did have some comments out from one of our Fed members. Yeah, so Fed Wallace said that it was rates are 50 to 100%, 100 basis points, above neutral. So we'll keep an eye out for any further commentary from the Fed. So slightly more, a bit of a shift there from Waller in terms of what he's looking at, and slightly more hawkish on the scale for FX Street. Overnight, we've got GDP for New Zealand. We've seen a bit of choppy price action for Aussie Kiwi, so it'll be nice to see if we can get a bit of a breakout from this range, ideally in the direction of Aussie, or in this case, Kiwi downside. Tomorrow, we've got a slightly busier day. We have got the UK Bank of England interest rate decision that is going on at 12 o'clock. Just a heads up, that webinar will be earlier than usual. We'll try to trade this data. I know Paddy spoke a little bit about option straddles. We are yet to finish our options recap, and we'll go back over all of these option strategies when we do this. But let me just see who is. Yeah, I'm not sure exactly who is on this meeting. Anyway, whoever is on the meeting for tomorrow midday, it will start earlier, probably at 20 to 12. So it will give us enough time to run through the data, what is coming out, what is the expectation, as well as going through the strategies, what we're going to trade, how we're going to trade them, and then actually executing those trades as well. So we'll start earlier tomorrow, 11:40 for the midday webinar. We are looking for the Bank of England for a 25 basis point cut, and a pretty high probability that is the case, and even higher now that we have seen a lower than expected inflation print from the UK. So it is more likely that we're going to have a dovish tilt from the Bank of England. Previously, there wasn't much wiggle room for them. I mean, inflation is still very elevated, but it dropped a lot more than expected, and we've seen a big reaction from the UK assets today. So what we might see is, possibly a dovish commentary. Possibly dovish commentary from the Bank of England. One thing we do get from the Bank of England that will be interesting to see, and we see now a potential for a 50 basis point cut. Fairly unlikely, but I'd say dovish commentary is more likely. We do get to see the voting for the members, so it's 5 votes. The consensus is 5 votes for a cut and 4 votes for unchanged. What we can look for here is, do we see more members shifting from votes unchanged to votes cut? That would drive the market move at that time. So we'll be looking out for this tomorrow. We'll trade that data when we have the midday webinar. We then have the ECB. ECB rates at 1:15. A fairly neutral stance. It sounds like they've given commentary around, this is where we expect to have rates for some time. If anything, maybe a slightly more hawkish stance, but we'll see how that goes tomorrow. 2.15% and 2% is the ECB rates for now. So we'll be looking out for this tomorrow, seeing what is, again, it's just going to be more the commentary that comes out from the ECB. Into the afternoon, we got US inflation data. So 130 CPI is due to slightly increase there from 3% to 3.1. And core consumer price is set to remain the same at 3%. So it's still a bit elevated, potentially going in the wrong direction. So that will again sway the Fed's decision making going forwards. At the moment, expectation is for a hold of rates in January. There's obviously going to be lots of data between now and then, so we'll be seeing what comes out. Little reaction to the previous October non-farm payrolls that came in pretty weak. Little market reaction. It's just old data, right? There's not too much to take away from that now. It's in the past, so we'll see how this inflation data comes out for the US. If we do get that weak reading, it puts the Fed in a better position to remain more dovish going into the new year. If this does increase or increases more than expected, it may well go against that idea of further cuts in the new year. We'll also have initial jobless claims, so a bit of strength from the labour market, or see if there is strength from the labour market. And then into the afternoon, evening, we've got imports, exports data from New Zealand and inflation data from Japan, who is currently apparently due to raise rates by 25 basis points. That'll be interesting to see if that is the case, if they do hike those rates. They've maintained, or they flipped what was previously a hawkish stance that they had. Inflation was high, they needed to hike rates to tackle this. That kind of got pushed to the side in the wake of the new Prime Minister, who was a very dovish candidate who wanted to maintain low rates, and that kind of, well, worked. They hadn't increased rates since. So this could be a fairly big shift. We'll see if there's any commentary along with this. Possibly a good opportunity to test out some options, especially just tomorrow in general. Good time to test out some options and around some of this data. So that is pretty much it for the calendar. We'll get stuck straight into the market profile so we can get through it all the time. So market profile, one of the other profile tools that looks pretty similar to our volume profile in terms of how it's displayed, how it's shown on the charts. What is the difference between the market profile and the volume profile? Do we know? What is the market profile actually showing us versus the volume profile? Yeah, absolutely. So volume profile is going to be, as it sounds, it's showing us the amount of volume that has been traded. A market profile is showing us the amount of time that has been spent at each given price level. Now, this is not going to be the way in which this is calculated. We'll draw out how it's actually done in just a moment, but it's built around 30-minute windows of time, essentially. So we might be looking at a period of time between 4:30 and 5. That is that 30-minute period of time that we are calculating this profile from. Because of this, it's best to view this on the 30-minute time frame. So regardless as to whether or not you use this time frame already, if you want to use those market profiles, it's best to include a 30-minute time frame, if not just for that time frame, so you can analyze that on the time frame that it's calculated from. It won't make a difference if you look at it on a different time frame in terms of the data you're looking at, but if you overlay the price, it just makes a bit more sense if you look at it on that time frame. So built around those 30-minute periods of time. Similarly to the volume profile, this is hopefully going to provide us with an idea of price acceptance. Where is price acceptance? Where were we happy to trade? Where were we not so happy to trade? Where was price happy to trade and not? So we can look for areas of potentially there's aggressive sellers here, there's aggressive buyers here, based on how much time we have spent at this area. TPOs. Yeah, so let's go on to that. So the market profile is the tool. So the market profile is the indicator. The market profile is made up of TPOs. A TPO is a time price opportunity, and this is the letters in the blocks, or blocks. So the indicator as a whole is the market profile. The boxes and letters that make up the market profile are then the TPOs. So I'm not too sure exactly why it is called the time price opportunity on TradingView, but the indicator as a whole is known as the market profile. So each block, depending on which one you use, if you're using the LAT one or if you're using the TradingView one, the market profile will be made up of a bunch of blocks, so a bunch of squares, or a bunch of letters. They're all representing the same thing, and it doesn't matter which one you choose to use, they're going to show the same signals, same information. You're not going to be at a disadvantage if you use one over the other. But each of these, and again, we'll talk about how this is made in a minute, but each TPO is either represented by a block or a letter. Now, the blocks and letters, a letter is probably the best way to start. A letter, different letter, is going to represent a different time in the day. So either so a letter or a block is what is represented as. The letter A might be the first 30-minute period in the day. The letter B is the next 30-minute period. The letter C is the 30-minute period after this. So each letter represents a different time in the day. Idea behind this is just so analysts can essentially see, without having to look at the chart, how has this day progressed. We've got the letter A down here, and we've got the letter Z up here. This day has started here and has ended up here. So without looking at the chart itself, you can get an idea of how the day has progressed. If you've used the TradingView market profile, you'll find that there's lots of different colors. And again, these colors are serving the same purpose. So a color or a letter so color or letter is representing a specific time in the day. So again, that specific letter could be 10 to 10:30, or that specific color 10 to 10:30. So that is why they're built up the way they are. Now these are from the 1980s. These were made by pit traders. Originally, these would have been drawn out by hand. Thankfully, we don't have to do that now, but these are not a particularly new tool. They were made to trade futures or analyze in futures markets. And have grown in quite a lot of popularity. Now you get these on a lot more platforms than just through futures exchanges. Now, essentially how this is going to be created. We said these letters are representing different 30-minute periods of time. So what we have is different 30-minute periods throughout the day. This is again why it's best to view this on a 30-minute time frame. So let's say we have got, this wouldn't be the start of the day, but let's say we've got 9 a.m. and then we've got 9:30, and then we have 10 a.m. and then we have 10:30, and this continues throughout the entire day. So the day is essentially broken down into different 30-minute periods of time. We're going to draw this out as a 30-minute candlestick chart, so hopefully it'll make a bit more sense as to how this is forming. But in essence, we've got a candlestick for each 30-minute period. If this was broken into smaller, say 31-minute candlesticks, that's also fine. But we're looking at that time period from 9 to 9:30. Now, we imagine this to be a 30-minute candlestick chart. During this 30-minute period, we're looking at which prices has this market profile traded over. Just to show it has, so for this, it doesn't have to spend an entire 30 minutes at this price level. All it has to do is trade over, and in this case, we have traded over all of these price levels on the right-hand side. We've traded from 25,527 up to 25,769. So during that time from 9 to 9:30, we have traded over every single one of these prices. And the market profile is now going to represent that by one block or one letter on that profile. So every price level that we trade over during this period of time, it will receive one letter or one block, just to represent the fact that it's traded there during this time. Again, it doesn't have to spend an entire 30 minutes there. It simply has to touch that price level during that 30-minute window. It could spend a single second there and reject straight away. Doesn't matter, it's still traded over this period. Then the next candlestick opens. Again, whichever price levels this trades over, it will receive another block. So if this now opens here, trades lower, this new prices from 25,769 up to 25,629 is going to receive another block on the profile. So that is traded over these three price levels here. This process then continues throughout the rest of the day. Any fresh price levels that have just traded over, so let's go up to here. So this price then trades up towards these fresh prices above. Now, we've traded back over these levels again. So all those price levels that we have traded over get a new block. So for 10 to 10:30, we have traded from 23,628 up to 25,938. So we trade back over these levels again. These will get another one. We can hopefully see how these start to build up. We haven't spent the entire 30 minutes here, but we have traded at this price level multiple times during this day at different points within the day. So it's not just we've traded here loads once. We have traded over this price level multiple times at different points through the day. We also then have new prices above that we have just traded over. So we've just traded over these. These all now get one fresh TPO. Towards there. Okay. So all of those new price levels also get a new TPO. Now it's important to note that only one TPO or one block or one letter can be placed on any single price level during the same 30-minute period. Now, what this means is that if this market, and again, this is a 30-minute time frame, so this would look just like one candlestick, but if this were to trade back down to here again, let's say to there again, and it leaves behind a long wick. Traded lower, it's come down, and we end up with this. Now, in essence, what has happened here is from 10 to 10:30, this price is traded higher, traded up, and then it's traded back over these prices again. So this is, basically traded up and then traded back down, but all within the same 30-minute period. So because it's within the same 30 minutes, we do not place another block on any price level that we've already traded over, or else we'll end up having loads and loads of price, we'll have loads and loads of TPOs building up in the same price if that market just chops around. What the market profile is trying to tell us is that over the duration of this day, we have spent lots of time here, not all in one big go, but over the span of the entire day. So that can only place one single block at any one price level. If this traded all the way back down to here, it would then be trading over these new price levels, and then these would then get one. But any prices that it's already traded over, it cannot put another block. And this process then continues, right? So we would be up here, this then opens here, trades down towards the lows, all the price levels this is just traded over, which starts at the top here, would get a new block. So that gets one. These three get one. That one was not supposed to be there. And these two price levels at the bottom. So as this day progresses, we can get an understanding of where was the market relatively happy to trade, where have we spent a lot of time throughout the duration of the day, versus where have we not spent lots of time. In this case, we've got these single TPOs at the top of the day. That is a clear sign that the market has rejected away quickly within the same 30-minute period and has not returned for the remainder of that session. So this shows us an element of price acceptance. Where was the market happy to trade, and where did we have aggression within that market? Any questions on the general formation of this? Obviously, this then just continues through the day. Similar to the volume profile, we're not looking to use the current day's profile for any signals. We're only looking at previous day's profiles because the current day is subject to change. If you would like me to re-explain any of those points as to how this is made, I'd rather you said. Then we're left confused. That's ultimately how it's created. Now, it can sometimes help to look at it as it is being created. So if you were to look at, and this is the trading view one, if you were to go at the start of a day on a 30-minute candlestick chart, you just looked at the profiles, you will find that this chart is following pretty closely a candlestick chart. So every price level that this is trading over is going to receive a new block. It's a little bit lagging, but see that gets a block. All those price levels down here is going to get a new block. That's getting a new block, but that's traded over. They're getting new blocks. So every price level this trades over during the day will get one TPO for that 30-minute period. Okay, it builds up like so. Now these used to be drawn out. I believe they were drawn out as a continuously running chart. So these can be, and you don't have to do this, but just to show, this can either be blocks or it can be letters. Each block says 30 minutes is the same letter. As in, so with the blocks, so similar with letters. So if I put to red as the first color, that means that the red is the start of the day. And if this is blue as the last color, the blue is the end of the day. So by just looking at the profile and nothing else, I can see how these days have progressed. This day started here, ended there, started here, ended there, started here, moved up, failed, came back, ended down here somewhere. So just by looking at the colors, or if you wanted to have it as letters, the LAT one is as letters. You can have it as letters as well. You might just have to zoom in a little bit closer for that. So here we can see the A being the first letter, and then I think we're at J at the moment, J being the ending, closing letter for where we currently are. And again, we can get an idea of how has this day progressed without necessarily having to look at the chart if we don't want to. You see this candlestick here, current letter it's plotting is a J, and that is just traded here. And the row beneath that has not got a J, it ends on the N. So it clearly hasn't traded down to this price yet. Whatever you find easiest to look at, the blocks, if you have the option, are probably an easier visual representation, but they are showing exactly the same thing. Now, this is how they would have been drawn. Essentially, each candlestick is put out in a continuously running chart. This is basically a candlestick chart for a 30-minute time frame that is all body. Wicks and tails also included, so it's a high and low candlestick essentially. Then they get squashed together into a profile. So that's kind of how they get drawn, and then they get squished into one single profile. This is how Ali or Mark has theirs set. So if you want to have a look at this, that's that one, and this is how they have theirs set. Have it set to auto. You can change it yourself if you would like to. You can change it from weekly to monthly on here as well if you want a longer period of profile. which can be quite useful if you're doing swing trades. We'll talk more about the application of these tomorrow. But if you're looking at swing trades, you can either work with higher time frame profiles, or you can work with lower time frame profiles around the higher time frame points of interest to provide you with confirmation of reversal. Kind of like if you were using RSI to confirm a shift in momentum, I could use a volume profile to confirm a shift in price acceptance around a daily fib retracement, for example. Okay, so that is that. Let me just, I'll put a link for that in the chat box in case you want to revisit that. Let's just quickly go through the signals. Okay. So in terms of signals, now when it comes to the volume and market profile, I would generally just focus on the market profile signals from the market profile. So for both of these, you will be able to visualize and see a point of control as well as a value area and a, yeah, I guess they're the two main things that they share. Now, for me, when it comes to the volume profile, I much prefer to focus on the points of control, value area, and shape. Shape is the other one. And I don't really look for those things on the market profile. Now, you might come to the conclusion that you do want to focus on those things on the market profile. That is fine. I personally consider the volume profile to carry a bit more weight, especially if there's a discrepancy between the two. Generally, you should find that volume profile, market profile follow very similar shapes and points of control and value areas. If we have spent a lot of time here, we've probably traded lots of volume. However, if there is a discrepancy, I would favor the volume profile, because if we have spent lots of time somewhere, but we haven't traded any volume, to me, that doesn't show as much price acceptance as actually trading volume somewhere. So just spending time there, just sitting there and not trading, to me, doesn't carry as much weight in terms of price acceptance. So if there is a discrepancy, I would move towards volume profile. Yeah, I'll go draw this out quickly so we got all the signals here. As I'm doing this, if you have got any questions, do feel free to ask. Or whilst I'm doing this, can anyone remember the signals that we can take away from the market profile? There's four main things, and I would categorize them within a support resistance and trends slash directional trading bias. So that's kind of how I would categorize those. You can remember what those are. So your profile might look something like this. Four main things. Also, when you're looking at these, you can do this whichever way you find easiest. Either you can look at the market and volume profiles, you can do your analysis, you can sort it out and whatever. Can you show that? Yeah, absolutely. Let's get that up now. Now for this, I can't remember what color it is initially, but if you're on a dark screen or a light screen, you're just going to have to change the settings for this. Good example of what to do when you're looking at them though. When you come to analyze the profiles, make sure you're not zoomed in extremely close to price and then trying to do them. Zoom out to where you would normally be looking at price, right? A reasonable distance so I can see the last 1, 2, 3, 4, 5 profiles. Not squashed together, not super stretched out. The price is filling the top to the bottom of the screen, and I can see the last 5 profiles. Hopefully how we're looking at charts normally anyway. You can then either hide the price, do the analysis on the profiles, and turn the price back on, which you can find in the 3 dots next to the asset name. 3 dots, go down to hide. That will temporarily hide the price, which you can then turn back on. Alternatively, you can split the chart into two. That's gone. Yeah, which is already done. So you can split the chart into two like so, which will allow you to essentially do your analysis on your profiles on the left-hand side. So I can say I'm going to take this level from here, and if I draw it on the left-hand side, it's going to carry across into the right-hand side chart. Right, so I can look, sorry, let me turn this off. Obviously have just the profiles, so just the profiles on the left, and then just the price on the right. So I can look at both at the same time, and then not hopefully obscuring one another as I do so. You'll just need to make sure you've got the drawing syncing through the layout turned on, and also when you go to the split screen, you'll want to set it to the same symbol, crosshairs to be turned on, and possibly the data range, which just means you're looking at the same area on price at the same time. However, if you click on one of the charts, it will mirror to the other. So this is on a 1 minute time frame. If I zoom in on this and click there, it's going to zoom in extremely close to this chart here. So just can be a little bit annoying. So however you find that easiest. Okay, now for the settings for this. A little bit more cumbersome than the trading view one. So if you have got the trading view one, you might want to favor that. If you haven't, then that's absolutely fine. You're not going to be at a disadvantage for using this. The signals provided are the same. It's just visually and the settings are a little bit different. White background, this is how it initially looks. Obviously, you can't really see much. So if you go onto the settings, first things first, let's just change the colors and then we'll go from there. So go into input. Because we don't care too much about the point of control, value area, and so on for the market profile, I'm going to make everything the same color. You could leave the points of control maybe. Firstly, let's do this bottom one here that's white. Change that to black so we can see it on this background. Change the next one to black so we can see it. Change that to black so we can see that. Point of control, I'm going to turn to red so we can. Actually, let's change it to green. Just any color that you can see it. Hopefully, a different color to what we'll be looking at. And then outside the value area, again, we don't really need to see what's outside the value area, so that can change as well. The only two colors that I will change on here are going to be the single prints, which are SP single prints, which you can see highlighted as red, single TPOs at the top here at the bottom, and the point of control, just for reference, so we can see where that is. You can turn off labels if you don't want all these labels on here. I believe that is this one. Yeah, where the single TPOs are, it extends to the right-hand side with a red line, and it says SP for single print, just so you can see where they are. You can turn that off if you want to keep it a bit cleaner, so turn that off. And from there, we can also get rid of the initial balance colors. Is that one? No. Okay, then if we go across to style, let's just get rid of boxes. Panel lines, nope. Let's go line fills is going to get rid of the initial balance block, which can go. Lines can also disappear. That's going to get rid of the session range line as well as the initial balance line at the back. And then table in here as well is going to remove the information table at the top right hand side, which you may or may not use. Once you understand how to adjust those, you probably won't need them. This is just saying if it looks like this, increase the tick size. If it looks like this, decrease the tick size. Then that's all okay. That's okay. Text size is fine. Let's change. Now, the only thing that you would otherwise need to change, and unfortunately you will need to do this as you go from asset to asset, most likely, is the tick value. Now, I don't know how, I don't think the automation is particularly good here. So you'll just have to adjust the tick periods as you go. Now, if the tick value is too small, in this case, we'll do 10. It's going to overlap and it's going to clump up. And if it's really low, you might not be able to see anything. So if you go onto a chart and there's nothing, do a much bigger or a much smaller number. If it's overlapping like this, again, make sure the chart is how you would have it normally. If it's Thumped up, you need to increase the ticks. Let's try 200. Try something bigger and see what it looks like. If it's spread out too much like this and there's big gaps in between each line, you need to decrease the tick size. So let's try 100. This looks better, but there's still pretty big gaps in between each row. They want to be as close as possible whilst not overlapping. So let's try 50. Okay, so 40 here looks pretty good. Each of those price rows is about as close as they can be to one another without overlapping. So that you might have to change as you go from asset to asset. Now for this, it's I'm not sure if it allows you to adjust this to a weekly period, unfortunately. I'll see if I can make any changes to that to allow you to adjust that to a weekly period. You can do a fixed range, so you can say, oh, okay, well, yeah. So you can do a fixed range, so you could put it in as last week or this week or whatever. But I don't, as far as I'm aware, it doesn't do that for you. So yeah, unfortunately not. Okay, well, I'll go through these pretty quick then, and we can come through and have a look at some of the examples on price and how to apply these tomorrow. Okay, no problem. Yeah, I'm not sure. I put that together a while ago, and I hopefully can adjust it now so it has the weekly profiles as well. Alrighty, so 4 main signals from the market profile. These are going to be broken down into, or as I would break them down, directional bias and support and resistance. First one is going to be known as excess. This is going to be forming at the top or at the bottom of a trading day. And it's going to be where we have got multiple single TPOs on each price. So excess, 2 or more single TPOs on different price levels at the top or bottom of the day. This is going to show us that we have had a move into the top of the day, wherever that was. That market is quickly reversed, and for the remainder of that session, it never came back up to that price level. So it's a lack of price acceptance. Lack of price acceptance at the high or the low of the day. And otherwise, it can indicate fairly quick, responsive buyers or sellers. In this case, obviously, sellers. So that market has moved up for the high, and then for the remainder of that entire session, it never came back there. If we think about what that would look like on a 30-minute chart, it is basically going to be, depending on how the body is, maybe a shooting star, which is a pretty good sign of selling pressure, right? So excess at the high of the day, excess at the low of the day, only found at the top and the bottom, and it has to be at least 2 of those in order to call it excess. If you have the excess at the high of the day, as we have here, this would be aggressive / responsive buyers or sellers. In this case, sellers. So excess at the high of the day would be aggressive sellers driving that market lower, defending that higher price, and for the remainder of that day, never going back. The following day's bias for this would be short. We're going in the direction of that aggression. So expectation is that if those sellers defended that high yesterday, there's a good chance they're going to continue to do that today. If we flip that around, we have excess at the low of the day. This would be where we have got multiple single TPOs at the bottom, would represent as a 30-minute hammer, potentially. And that is a sign of aggressive or responsive buyers. Following day bias for that would then be long. Expectation is that if market participants have defended this low yesterday, we've got that big candlestick, lots of TPOs at the bottom. Following day, expectation would be that continues. Now, this could be something like, for example, this, where we've got these single TPOs there, single TPOs there, single TPOs here. If you have it on either direction, it can be considered more balanced, and the breakout direction would then confirm whichever one it was. So excess at the bottom here, we do get a bit of a move higher, but ultimately fails. Excess at the top here would be bearish for the following day. That initial move down continues up. Excess at the bottom here would be bullish for the next day. We do get a bit of a move up there in the following day. Much like with everything else we've looked at, you can't just take that by itself. It is powerful in the context of a setup, but it's not going to work every single time. It's not going to guarantee that following day move, but it is going to show an underlying aggression, but used in the context of a setup. Now, the next one is also going to be forming at the high or the low of the day. This is going to provide following day trading direction. So this would be a poor high or a poor, in this case, low. So a poor high or low is going to be where we have 3 or more TPOs built up on the same price level. So essentially the complete opposite of excess. We haven't got that push away. This market has had the ability to trade at this low for an extended period of time throughout the duration of the entire session. So that ability to trade there shows an inability for, in this case, buyers to drive that market away. So it's essentially the complete opposite of the excess, where we have seen that aggression, that push away. This is where that market has been able to trade there, so shows a lack of ability to push that market off. So a lack of aggression at the high or the low. Lack of aggressive buyers or sellers at the high of or low of the day, depending obviously where it forms. Same as before, this can be found in either direction, and where it is found is going to determine how we look to interpret that on the following day. As we have got here, a poor low is going to be a lack of aggressive buyers or responsive buyers. They were unable to push that price away. The price has been able to trade at the low for a long period of time, for an extended period of time. That market is traded at this level, and it's revisited that area multiple times throughout the day. That'll be a poor low. Following day bias for that is going to be short. So following day bias, if we see that poor low, could be that there is a lack of aggressive buyers, and that lack of aggressive buyers may well continue. Now, this gives us more of a trading directional bias. However, there you could certainly take the breakout of this low. So in this case, we've got both these things: excess at the top, strong sellers, poor low, weak buyers. If that market breaks the low of the previous day, I'm going to look to go short. Now, you're going to find there's going to be lots and lots of different signals that we're looking at this week, lots of ways of interpreting and using things. So try to take all these things one at a time. Don't try and do everything all at once. Focus on one single signal. Try and find a few examples. Try and take a trade off one basic trade. And try to take them one at a time. If you understand them all a bit better on an individual level, it will become a lot easier to then combine this with other things. Now, if we flip this around and we have a poor high, this is going to be where we have had that market trade to the top of the day, and it has had the ability to trade here for an extended period of time. This would be a lack of aggressive or responsive sellers. So essentially the complete opposite of that excess that we have at the top there now. Following day bias for this would then be long. Expectation is that that lack of aggression continues, and following day we're going to maybe break this high and continue in the other day in that direction. Now, these are the two that I would consider to be a directional bias. Excess, poor highs, poor lows. on your spreadsheet, we'll have a look at one tomorrow. On a spreadsheet, this would go down as what direction do I want to trade for tomorrow on a intraday basis. Along with then the volume profile point of control, volume profile value area, volume profile shape, now excess and poor highs and poor lows to go alongside those. Then we've got two levels of potential support and resistance. First one is probably the level that I use the most across all the profiles, alongside the equivalent thing on the volume profile. This is going to be a single print. This is a single TPO inside the profile. This is going to provide us with an area of essentially a lack of acceptance. So an area where that market has moved aggressively, we have not had much opportunity to trade. Very similar to a low volume node and quite often used together. So it shows a lack of acceptance. We'll have a look at some examples, but when you combine these, you can either find a stronger area of interest, or you can refine what is a large area of low volume. You might have a massive low volume cave, which to try and trade is quite tricky. But if you combine that with single prints, you might find a slightly smaller zone inside that bigger area. Similar to low volume areas, it is going to show a lack of acceptance. Slash an inefficiency inside that market. Now, the market doesn't like to have those inefficiencies. If we get those gaps, if we get those areas where the market's moved aggressively and it has had an inability to sufficiently trade around this zone, there's a good chance that acts as a bit of a magnet to see that price back into and to trade into slash off of. So we can use this in a couple of ways. We can use single prints as a possible target to aim towards. If there's a bunch of single prints above the current trading area, expectation is that these will fill that zone, price will fill that area, refill any resting orders, and just have the ability to sufficiently trade through this zone and fulfill the market auction process. So using as a target, you could have a short-term scalping type position. We are just trading through these areas. Or generally how I prefer to use these would be using the single prints as support and resistance. So after that market is filled in this area, we can expect to see whoever missed that initial move, whatever order's been resting, that market generally respects that area as support and resistance. Bring that maybe through here, but something like this, for example. This zone, these areas of single prints, and we can see for the following days, we've got a bounce and a bounce and a bounce, and ultimately breaks out, but we get multiple opportunities to trade off that level. The other single prints before then, we get this zone here, has a small bounce, has a breakout, has a retest, and then moves off. It can be just one single print, it could be several single prints up here at the top of this day, a very nice interaction off this level. And something like this is then where we could start to align confirmations and confluence. Big downtrend, big move lower, single prints above the previous day, a fib retracement in this area as well. We have now got a low volume node, single prints, probably also a low volume node. Yeah, but big, so this is where we got a big, massive low volume tail. It's hard to try and trade inside of this. Where does the bounce happen? The single prints have then allowed us to refine this big, massive area, which would have been probably from there to there. Yes, it's worked, but it's a big, enormous zone. So those single prints have refined the area slightly. We've got a B-shaped profile. We've got points of control lower on consecutive days. We've got value areas lower on consecutive days. So we've got directional confirmation We have also got on the volume, on the market profile, so let's just type this out quickly. So volume profile, we have got a V-shaped profile. We've got the point of control lower, and we've got the value area lower, the confirmation on direction, and then a low volume node as resistance. As our volume profile, market profile then, in terms of directional confirmation, we have got excess at the high, and we've got a poor low. So massive poor low down here, that big build-up of multiple TPOs and those two single prints at the top give us a good indication that we have got aggressive sellers and also a lack of aggressive buyers. So we've got taking pretty much all the boxes there for both the profiles. Then it's just a matter of the resistance level, which for this low volume node from the volume profile, single prints from the market profile, and then also a Fibonacci retracement from the price. To provide a slightly more rounded setup with those different tools, obviously then we would look to go down to the lower time frame and see execution wise, we've made it into this area. Everything looks good. 5-minute chart. What have we got? Not normally in the context of where I'd want to see this, but a descending triangle possibly as reversal. Alternatively, waiting for a bit of a breakout structure. Otherwise, we've got 1 minute head and shoulders. So shoulder, head, shoulder. Depending on your execution time frame, you might have been able to have caught this breakout of that pattern or the breakout of the triangle instead. What is this, Australia 200? I can't say I've ever traded the Australia 200 before, but it seems to be respecting these pretty nicely. So, single prints. Good level to look for. Now, the last one that we can look for in terms of support and resistance is going to be a ledge. A ledge is a build-up of TPOs from one price level to the next. So from one price level to the next, have we got a build-up in TPOs? That would be something like this. Ideally, it's going to be a minimum of 3 from one to the next, but it could be quite a lot. Kind of similar to a poor low or slash poor high, but inside the profile. In the sense that what we are basically looking at here is this market is traded at this price level for a lot of time, lots of different points throughout the day. It's traded very little time at the price below, right? So what we kind of end up with ultimately is naturally some degree of support or some degree of resistance based on how this has to form, right? That has to trade at this price level for a lot of time and the following price level for not a lot of time. So it is naturally going to create some form of support or resistance. In this case over here, or in this case over here, let's try this one. So here we can see from this price level to the next. So there to there, that would be our ledge. So this would be essentially drawn, projected out for the following day as possible resistance. Let me just overlay the price there. We can see we got an okay interaction there, right? We got this bounce here off that level for the following day. Not the biggest reversal ever, but we did get a bounce off that level. Now it's not the biggest ledge, so it's not like traded there for a very long time, but we can see that interaction that we've had there and how that has formed. We can find a bigger one that is, this one, a much bigger level. A much bigger level of ledge where we have got this big build up there from that row beneath to the row above. Big ledge, also maybe one above here from there to there. Two big ledges. If we just look at price for those days, we can see quite clearly how that has formed. Following day, a very nice bounce off that ledge. That one above getting chopped up quite a bit, but smaller interactions, right? Smaller bounces. In between, so we got small bounce, breakout, retest, bounce, bounce, breakout, and so there and thereabouts, but that bottom one a much nicer interaction. So similar to a poor, low, or high, but it's formed inside in the sense that it is showing price acceptance and a accumulation of time spent. And this is going to be used just as we would use any other level of support and resistance. Potential bounce, potential breakout. So those two would be levels of potential support and resistance. These two would be possible indications of direction for the following day. We're going to end up with lots of different things here. So we'll start to go through those spreadsheets. I'm sure Ali's probably gone through his. I'll have a look with you tomorrow on mine. And we'll see how, and it just gets you looking in the right places at the right things. That's the market profile. We'll have a look through some more price examples tomorrow. And we'll start to combine this hopefully as a bit more of a setup. But try to give these a go. Try to practice with these. It can obviously seem a bit daunting, as I'm sure lots of the previous stuff did, but I'm sure you're using them okay now. So it takes a bit of time and practice, but we'll get there in the end. If you have got any questions in the meantime, do feel free to pop us an email or examples you want us to look over. Feel free to pop us an email. If not, we'll finish up there. Yeah, Bank of England tomorrow, so we'll start that webinar a bit early. Just a heads up, 11:30 for that. Yeah. So yeah, it was those ones. It was those ones there. These are the settings they have on theirs at the moment. So those ones through there, and the style for theirs is like this. I don't know if they've. Yeah, I think that's all they've got on theirs. So yeah, you can change it from weekly to if they had on weekly. I think Ali uses the weekly quite a bit. So for the volume profile, yeah, I posted those in. Are you in the Discord? I think I posted all the settings on there. So session volume profile. This is how I have mine set up. Again, it's more the color scheme that I think makes it a bit easier to look at. Change it to total volume, and then adjust the colors so you've got inside the volume area and outside the volume area. Makes it a bit easier, just to make things as clean as possible, essentially. But yeah, there's those settings there, and those settings there. You can revisit that if needed. No problem. Cool. All right. Cheers, everyone. Sorry, it's a slightly quick run through, but we'll have a look at a few more examples tomorrow, and we can go through a few more questions then at that point. Cool. Cheers, everyone. Have a good evening, and I'll catch you all. It might be me on the midday, so I'll see you potentially then.